Bitcoin isn't just a currency, it's a weapon against financial lies. What you're about to discover is a secret Wall Street doesn't want you to know. The Bitcoin Truth Network is real, and it's rewriting history as we speak. Ready to see how this changes everything? He gave the explanation, the notion around in the 14th, 15th century, where the Medici family have founded the notion of banking industry. At that time, they had a whole heap of several commodities. He made reference to some Portuguese monks. They're onto one of their crusades, and as a result of leaving their gold behind, because they couldn't actually physically take it along with them in those quests, because, you know, as I've mentioned in one of my various videos, one of the defects of gold is the confiscation of gold. People can rob the gold chest and claim it their own, which is one of the many defects gold has over Bitcoin. Now, as a result of the Portuguese quest, they left the gold chest behind, and then one of the Venetian merchants, and particularly the Medicis, they kind of scratched their heads and said, well, there's this bunch of gold lying around in the churches or abbeys. And I thought, well, how can we make money as a result of a heap of gold just stashed dormant somewhere? It's not yielding anything. So they scratched their heads, as I said, and they thought of the notion of lending. And that's really the point where the birth of the banking industry as we know it, lending and credit system is built on, where they start to lend credit, loans, in return for interest payments. So that's the novel idea at that moment in history, where the Medici family, they've set up a single ledger in the first Medici bank, the first bank in the world at that time. Well, say, listen, we're going to be the custodians of this heap of gold, and we're going to start lending that out in return for interest payments. And the way they've actually managed that is through this single ledger. So this is the first ledger that the Medicis ran, and said, well, okay, you're going to give me collateral, let's say $100 worth of gold. We're going to be the custodians of that for you. And as a result, we're going to manage a small amount of fee for the lending of that $100 worth of gold to borrowers out there who may need it. And instead of actually physically moving around these pieces of gold, as a result of this lending, they've actually held it and managed a single ledger where they've actually accounted for the movement of the amount of money that's been coming in under their custodianship, and then lending out the money to other borrowers at that moment in time for a small fee. Now, of course, as Mark alluded earlier on, there's a lot of discrepancies, a lot of temptation for the Medicis who were running the ledger on behalf of its customers and borrowers. They were obviously into the habit of changing the entries in the ledger system at that time to their benefit, to their gain. So that actually came about the notion of double entry accounting. So this means that we're going to have a couple of ledger books that would take care of the actual debit and entry into the ledger books themselves, and we will take care of the reconciling of those two sets of ledgers, such that whenever there is another $100 gold coming into the system, they will account for that, as well as lending that out as debit to their borrowers, and then they charged a small amount of fees. But of course, again, since it's run by people, the Medicis in this case, and given that there was a lot of backhand dealings to manipulate the entries in this double entry accounting system, well, that wasn't enough. So this is the issue that we've had all the way up until the birth of Bitcoin, and indeed the blockchain, the first blockchain, which was Bitcoin at that time, back in 2009. And ever since then, this was the birth of what we call now the triple entry accounting system, which means that it makes the prospect of fraud on those ledger systems mathematically an impossible task to do. And this has given rise to what Mark has mentioned, the rise of Bitcoin as the definitive trust network. So whenever you, let's say, want to send $100 worth of Bitcoin to, let's say, Alice somewhere in Wonderland over this Bitcoin trust network, you will have the ultimate benefit and assurance that you can do that in a trustless manner, without the intermediary, without the Medicis running the public ledger system. Instead, you have the Bitcoin Trust Network. because this is really, really revolutionary. This is something maybe people, particularly those who are new into the Bitcoin and probably heard it for the first time, they can't possibly understand the single benefit and the impact this has onto the Bitcoin ecosystem at large, right? And this is an example of a medium exchange type use case, which Bitcoin is. But for me, ultimately, as a Bitcoin investor myself, this is not just the definitive reasoning why I decided to invest in the asset, even though this is an important revolution, of course. Anything that requires no intermediaries, no banking system, when I send my Bitcoins to a third party or to another person in a different country, seamlessly and borderlessly and trustlessly, I also want to use it to store my wealth. So you might have heard the notion of a store of value, because Bitcoin is the most scarce asset out there in human history. There's only going to ever be 21 million Bitcoin circulation. So what I'm trying to say is this eloquent explanation, predating the Medicis who actually founded the banking industry, that have their own ledgers, that prospect of fraud still exists. And I think this is actually important for investors to understand. There is still that prospect of fraud, the actual manipulation of banking transactions, because at the end of the day, the ledgers in the banks are their own ledgers. It's not made public. This is really different in contrast to what Bitcoin is. It is that definitive trust network. It is the definitive worldwide public ledger system that all participants can access. All can invest their own transactions in terms of investing in the Bitcoin. Those transaction entries are indeed held in this triple entry accounting system, where it's completely free from manipulative fraud from any banks, any Medici-like merchants. It's free from all of that. That, I think, is the message I'd like to leave you today. So hopefully you found this episode really inspiring and gives you that added assurance and understanding what is the definitive use case advantage of Bitcoin as that trust network, if you compare it with the banking system that have their own independent ledger systems. As I said, is the prospect for fraud and manipulation and corruption will still be in place. And given that that is run by people, which is different from the Bitcoin Trust Network itself, it's not run by any company, no corporation, it's completely public ledger system. If you compare that with the banking systems, they are not. So the prospect of fraud still remains, but not in the case with Bitcoin as the definitive trust network. So if you found today's episode interesting, well, please hit the like button to share the video to other colleagues and friends who are starting to think, well, there's a lot of news coming out from Bitcoin. Maybe I should invest some of my wealth into it. Well, please share this video, because this could give them that additional explanation and understanding of Bitcoin and how it can help them protect their wealth, and also to help in those medium exchange type transactions over the Bitcoin Trust Network. So if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.